Ugly, ugly. Jeez. Outside up top. What's up, dog? Another day, another delivery. I'll be waiting until 3 o'clock to really look to engage into anything. Pretty much my protocol. FOMC, wait till the last hour of the day. Two-stage event. So 2 o'clock, you get some movement. Right, we get that here. 2:30, you usually get more movement. We get that here. And now we'll just wait until the last hour. I like to see whichever one gets interacted with first. I'll probably just look for the opposite direction, to be honest. So if we run higher, trade back up into this 1 hour. Try to take it lower. Yeah, no, I always avoid the morning. Don't really care for it. No need. Just another day. Choppy choppy. Really just offered you new day opening gap setup. Really the only longs. Off new day opening gap here. First position holds easily. But that's kind of the delivery you get. As of now, once again, a lot of PD arrays overlapped here, right? So I keep this off because it gets crazy, but understanding a lot of time-based PD arrays are surrounding this area in price. Consolidation could be expected as we head into 3 o'clock. Really, for me, I'm just going to wait for that liquidity to be engaged and try to find a setup in the opposite direction. No hard bias at the moment, really. We'll be a little fluid with it today. So for me, right, if we run buy side, I'll look for a short back down. If we run sell side and give some type of reversal, I'll look for the run on the buy side as we head into the last hour of the day. Yeah. Small opening range gap. So once again, that's kind of an indication, potential consolidation. FOMC really wasn't as violent as expected as well. So once again, we may just be choppy the rest of the day. Still understanding we're in very extremely high risk conditions. One tweet at any time could dump this or send it flying. So we have our 8:30 open and the first presented aligned here pretty well with the sell side, which is why I'd like to see if we're going to dig down into this area and pick up this liquidity, if it's going to offer us a reversal, especially now that we've kind of left these highs up here, if we engage with the sell side first. Daily chart, let's see where we are. When you look at 45, I mean, what's that at? Pretty much the OB there. I mean, it's a possibility if we're going to be heavy. Right, it really depends on if we're going to want to trend or not. If we're going to remain in the range, we'll probably just stay from this low to this high. But if the objective is to kind of hold this daily fair value gap here, break lower, that's going to be a pretty easy run on liquidity with all these lows sitting here. Right, I wouldn't mind that. but we'd have to break below like these lows with displacement. Closure below these, leaving some type of inefficiency. Then I think we continue to fall. But for the time being, really just, yeah, consolidation here. Let's go back to ES. Let's see, still stuck inside. So I'm making an attempt lower. We'll see if it's going to be like some type of inversion. We'll see if it can be like a sweep of that low YouTube model. We'll see what we get there. A few minutes until 3, so maybe we play around till then run out that liquidity. Let's say that we displace through these lows, fall below midnight, like break this low. I'd actually aim for yesterday's low again and the larger new week opening gap. So this large new week opening gap here. Cool. So there's the liquidity, and I'll see what we get. Right, what we kind of want to see is a few things, I guess. If we're going to try to use an inversion, see if we leave that last fair value gap here as we trade into it open, and then do we invert it on the way up? That'd be the inversion play. Conversely, we could create some type of short-term low, trade up into this, hold that, attack this low, and then break higher. That'd be the YouTube model. Only a matter of what kind of candlesticks we're going to get here now. So we're not going to get the break through this with the fair value gap. That would be kind of an indication of continued bearishness. It'd also be a little bit better of an inversion play, right? Like if we could have broke this low with displacement, left a fair value gap, and then invert that, that'd be a lot just cleaner. This is still fine, right? Especially because we have a first percentage here. So now we are going to watch fair value gap that gets created here. What happens? As we said, if we're going to hold that, let's say we hold that break, clear this low, and then invert. I'd actually kind of like that a little bit better because now we're picking up short-term sell side as well. So we'll see if we can actually run this low one more time. Maybe even this low here. Hold midpoint of the opening range gap. So notice midpoint and midnight are pretty close to one another. And they're right actually below that sell side. So that'd be kind of a good sell side to pick up if we're going to want to hold those levels. So I'm going to see if we cannot attack this sell side and then invert this fair value gap here. Still waiting for 3 o'clock, honestly. So I'm not really in a rush at this point, just following price. Perfect delivery, equal lows, should run those lows. As we said, we got that sell side, we got the midnight level, we got the opening range gap midpoint. So now this is the type of delivery that would leave a fair value gap here. Because right, look where this candlestick closes. So now, let's say that we anticipate something stays open right here. Some type of fair value gap. If I'm going to favor longs and try to just basically trade the reversal of this consolidation, now that we've cleared this low, try to get back into the range, clear the highs, relative equal high buy side, we'd actually want to leave some type of fair value gap here. And then we'd want to see that actually get inverted because that'll align well with midnight and the midpoint of the opening range. So we'll see. Let's say that we just continue to fall. That's kind of where we mentioned we'd have to go a little bit more bearish. For the time being, I don't want to fully commit to that yet. I do want to see the fair value gap there, right? So we kind of, it delivered exactly where we would see, okay. So if that does stay open, I wouldn't mind that. And then I'd look for that to be inversed. That's pretty much how we were anticipating that there. That's funny. That's going to be the exact fair value gap. Heavy right now. We'll see if we want to maintain that. All right. I'm not fully convinced this is going to start falling. I think this is trying to bait some people to then use this as a target. Higher time frame. Opening range, we clear the higher time frame sweep. Yeah, okay. So I want to wait and see if we can invert that, to be honest. That's going to be my play. If we just keep following or falling lower, might not get the entry from me. And I'll be fine missing that. Aggressive sell side here. Just going to keep that up for now. So we left the fair value gap. That's nice. If we're going to maintain kind of this bearishness, if we're going to close underneath this new day opening gap, this is yesterday's low. Closure below that, to me, would actually be more bearish. And now we're going to try to make an attempt into sell side. Because that's yesterday's low and that new week opening gap. It's going to be a pretty strong area in price. So we're going to watch that level. Still want to see this be inverted here. That's midnight. I'd like to see us get above that to look too long. Find support inside new day opening gap. Ideally, midpoint holds the bodies. So the wick can go into yesterday's low, as we said. First attempt at kind of retesting this bearish fair value gap. From here, I want to see what happens now. If we hold that and break lower, continue to attack sell side, we understand why. That's going to be the fair value gap that wants to hold bearish, in my opinion. I just like the idea of trying to get a run on this relative equal highs up here now. 3 o'clock after this candle closes. So now we'll head into power hour. We'll see what the last hour of the day gives us. There's also a daily volume imbalance here, so I do like that. All right, this little area here. So this candlestick hasn't closed yet, but you could still just use the opening. Which is right here. So these two areas in price are a daily volume imbalance, right? And it's aligned obviously with the new day opening gap. That makes sense. Just wanted to, so far, yeah, if we can hold that, I would like that inversion play for sure. Simply waiting for that. Closure below, as we said, to me, that if we're going to start closing below this, I want to see if we leave some type of inefficiency here. If not, this may be an immediate rebalance. So as we trade into this candlestick's low, the original daily volume imbalance, if we're going to reject this and hold bearish, we may see price actually make a pretty quick attempt into this sell side. We've just cleared the short-term low again. So I still don't mind that, right? Picking up a short-term low. Let's see if we can now displace through that. If not, as we said, we're going to hold that daily volume imbalance. Immediately rebalance this little candlestick. See some down close candles in the sell side. For me, because we're aiming for longs, I'd like to see us actually get back above the daily volume imbalance here, the low of it. Make an attempt to get pretty much back above its midpoint as well, because that was what was holding us originally, right? So if we can get back above both of those and then push up through the high, inverting the actual bearish fair value gap, that would be my area of entry. So far we hold midpoint, also the 1 minute volume imbalance. So if we're going to do that, I'd actually watch and see, is that going to be resistance to send price lower? Need to get above that area. We have the bullish volume imbalance, which is nice. I'd want to see that stay open, closing above this bearish. If we close this bullish volume imbalance in and actually maintain bearishness, I think we'll make another pass at the daily volume imbalance. Try to get underneath it again. Nice, so that's what we want to see. Let's see if we can invert here now as we first test this. Yeah, the daily volume imbalance is just the difference between the daily candlesticks. All right, so where the previous daily candlestick closed here, and where this candlestick opened, that's a volume imbalance on the daily level. And these will form on all the time frames. But the daily ones is just going to be higher priority, right? Because top-down daily candlestick charts will kind of have the priority over the lower time frames. So you'll see we're hitting the perfect high of it now. Right, if I went to it, it's a new day opening gap, so it's an indicator. But I just don't want to have all the indicators up as well. But you see that's what we're hitting perfectly. So if we can get above that, as we say, invert the actual fair value gap here, this is where we're going to hold bearish. So let's say that we want to maintain another bearish delivery and run into the sell side. In my opinion, this will be the line in the sand because it's the daily volume imbalance. It's kind of the original sell side that we broke through. And as we speak about, if we're going to break through that with the fair value gap, that is confirmation of the bearish delivery. Our bias for the short term, however, is a retracement into the range. So we're going to wait to see if that can't be inverted. If our bias is incorrect and we want to just stay heavy, it'll fall from here. So I like that we inverted that. Pretty much would want to see that now offer some type of support if we're going to hit that level. Just going to clean it up though. So there's the attempt, 5 seconds. We'll see if we can invert. We were able to, so I'll probably just try to get in here. I wouldn't want to see the low of this swing low be attacked. And we'll just try for these relative equal highs. So let's see if we can't get a retest of that. Pretty much using midnight. Ideally, if we can leave the inefficiency open as well, that'd be even better. But if we tap it right now, that's fine. Okay, so we're in there. Now we'll just wait and see. All right, as we said, we closed above it once. We immediately revert into it. Hopefully we can close above it twice. As we say, we want to confirm that with 2 candlesticks ideally. So first candlestick closes above, we'd want another one to confirm that. This candlestick kind of negates the previous candle's action. So we'd want to see another candlestick close above, and then ideally use it as support to close above again and start running higher. As we said, we are now above the midpoint and midnight, so I kind of would want that to hold. If I zoom out a little bit, we have midnight. Oh, it's getting blocked. So midnight's right here. It's this little dotted area. Midpoint of opening range is here. Want to kind of reclaim that we did get underneath it. Right, so we're visiting this little 1 minute fair value gap. We'd want this to hold. We understand we may be choppy, so at the very least, stop for us had to be all the way underneath this low. The daily volume imbalance, as we were mentioning earlier, that's going to be a very key area. That's going to have higher priority than the actual 1 minute structure itself. So we would allow for that. As we said, if we're going to fall through that, attack basically the lows again, get underneath the daily volume imbalance. That's where our expectation would then be for sell side, and we would just be out at that point. So daily volume imbalance there. Preferably candle bodies hold that. If anything, hold midpoint. If we give up midpoint, my expectation would be the low, and then more than likely it'll make a run for the stop. So we'd need to see midpoint here. Yeah, so for this one, right, we were just trying to match the speed with speed. So as we create all these down close candles, expectation would be if we truly wanted to actually revert into this range aggressively and attack the highs, we would see that same speed be met on the way back up. So as we create close above, you would usually see, right, that be used aggressively to then support price higher. And that's what that basis was on. As we mentioned, now that we're already coming back down into it, gives you a little less confidence in the actual trade itself, unless the midpoint of the volume imbalance here could hold. So that's kind of what I'm watching now. As we said, if we were to close below that level, in my mind, we're going to make an attempt at the low of the actual volume imbalance, and then probably try to get these lows again, which would get our stop here. So kind of looking at this as our last line of defense here. So still eyeing the midpoint. If we make another pass at this low, can still revert. I'd probably still try that one more time for the longs. Right, second opportunity. Higher time frames have kind of flipped a little bearish, which is not what we wanted to see. Right, so if I go to the 5 real quick, as we look here, we held the 5 minute, and then we actually got above the volume imbalance closing there again, which is why we're going to go ahead and try to go long. But now the 5 minutes actually returned into the daily volume imbalance. So once again, would still want to see that midpoint be where we can find support now. 5 minute candlestick is just open, so we'll see what this 5 minute candlestick can do. If it can get back above, that'd be nice, that'd be ideal. Right, we'd want to see it make an attempt to get back above the daily volume imbalance. See the higher time frames trying to kind of align with that. This 5 minute and the 15 will close at the same time. So to me, that would be pretty kind of important. Because if the 15, excuse me, can actually close back above while the 5 minute closes above, that would just give us a little bit more, right, confidence, added confirmation. There's midpoint. Let's say devil's advocate, we're off sides. After hitting midpoint and returning into the high of the daily volume imbalance, we're going to find resistance there. And it will use the high of the daily volume imbalance as the area to send price lower. So we would need to see price close above, as we're mentioning, invert the actual bearish premiums that we created on the way down here. Notice how that is perfectly aligned, right? So consequent encroachment is the original bearish. Areas like this are where price will tend to hold and reject if we're off sides, just kind of like we see here. So we would not want to see that, right? We want to see price pretty much be willing to push through this, invalidate the bearish premiums, not hold them. As we said, high the daily volume imbalance is where price will hold if the idea is to attack lows. Excuse me. So really kind of keying in on these levels now of the daily volume balance and the little inefficiencies here. Boom. So right there, right, making the pass at the low, closing below, to me, that would signal a stop out, an attempt at the low of the fair value gap or the actual volume imbalance and into these lows here. There's the low of the volume imbalance, stop still secure. We'll see if we can't hold. But now in my mind, the actual midpoint is going to be used as resistance. So we need to aggressively try to get back above that. There's the low. We would need to see price push through. If we can make an attempt to close above at that point, we can use this low as our new stop. Cool. So we're able to hold that, right? Daily volume bounce low protects. Stop will go right where that is at this point. If we leave an inefficiency here, I'll probably stack a position, to be honest. As you said, this is the 5 and the 15, so I'm waiting for that closure. If we can get above 830 especially, that'd be nice. Okay. So we do leave that open. As we said, stop will be here. We could probably test that daily volume imbalance again, to be honest. It seems like it's what price is going to want to reference. If not, we'll look at the actual inversion here, see if it wants to hold that, give another run higher. As we said, that's a midpoint, that's the opening range gap midpoint, and that's the midnight level as well. So retest of the daily volume imbalance. At this point, we have the actual down close candle perfectly paired with that. So we'd want to see that offer us support for sure if we're going to try to hold from there. As we said, for us stop, we'll just be below the low. In my mind, if we come back down all the way into the low, we're probably just going to want to consolidate into the close. I'm gonna try to add one more actually if we hit this. since we were able to cut a little bit of risk from this original low. Not really too worried about that, to be honest. So already in my mind, if we are correct, it's going to be high resistance. In low resistance runs, fair value gaps won't get completely filled in. So now we just have to commit to kind of the higher time frame key areas. Daily volume imbalance. Daily low. My previous day's low. We've already engaged it now. So our expectation would be if we're going to engage it once here in the morning, come back down to it now in the afternoon, and we actually want to trade higher, we won't make another pass at that daily low. Actually, we'll try to pick up one more here if it gives us a chance. Okay, so far, a little boring. Right, we can commentate all the little candlestick fluctuations, but really we're just basing our entry off of the higher time frames here. Let's say that we can hold this and we just start moving away. That'll be ideal as well. That'll be good. Right, we've hit kind of where we would need to deliver inside of this fair value gap. We hold the original inversion as well. So now, right, the bodies are respecting the inversion. Wicks are going a little bit lower just into the actual bullish. Now that we've left it, if this is kind of true order flow, we should respect this bullish fair value gap here. Reprice into it, close above, it becomes rebalanced. Now you would expect to see that be respected if we were going to start trending higher. We'd like to see at least maybe equilibrium, right? We could take this leg. We've already hit that. So that's kind of why we're seeing hesitation. Take the original leg. We've hit equilibrium as well here. We'd want to see displacement above that. Continued price delivery higher. For me, we'll probably partial one. Usually you would take it at 5 handles, so you could already do it now. But with this larger range, I kind of would want a little bit more for a partial at least, right? So I'll probably go for a midpoint here, which gives us a good 10. Yeah, I'm fine with 10. So if we can get midpoint of the 5, we'll just close 1. We weren't able to pick up this entry, unfortunately. I might still leave that because we can run this low out. We've seen that in this choppy delivery. Especially if we partial out. If we do partial out, I'm going to leave this entry here, modify the stop. We've just displaced above the first presented. So let me bring back some indicators. All right, so we have 830 and now we have this first presented. So I would like to see this stay open, this fair value gap, because that would be perfectly aligned with the first presented fair value gap. Should offer us now a pretty strong area in price to find support. pair that with the fact it's also the high of the opening range. So if we're going to dip down into that, I would like to see price hold from here, make a pass into partial. And then potentially, as we say, I like this, that'll be final target. We'll hold the last contract for that. And then kind of just use our stop loss to manage risk on the way up. So this is our 5 minute. No, just trying to get partial at the 5 minute. We're inside this 1 minute here, okay, and this is going to be a gap. These wicks, when we create these kind of wicks and then we displace through those wicks, we see those as gaps as well. So that's why we're kind of getting stuck here, right? If we were to show this, it's that paired with the 1 minute bearish. We're simply understanding why we're running into hesitation here. Price will hit these speed bumps and stall out. If our expectation, however, is the continued bullishness, these will get invalidated, they'll get traded through, and then they should become areas of support in price. Right, so as we see price hesitate here, we pretty much want to see price then expand through those, return into them as inversion areas, to then support price and send it higher. Still allowing really for this, because it is a little choppy in here. This is a 5 minute. Same aspect, however, if we're completely off sides now that we've hit this 5 minute, we may fall right through the volume balance and attack sell side, right? If we're offside in our idea that we want to get these relative equal highs and we want to instead clear sell side once again, that's what will be stopped. Personally, I like the idea of running higher, so we'll just commit to that, right? Trust that, trust the analysis, and I'll leave the SPY entry here. So I am watching on the way down. We are creating premiums, right? We have to do that if we're going to go lower, so I'm not too worried. At this point, we're kind of expecting the premiums to continue to hold. Say that we want to get entered here, we would expect the volume balance to hold price lower, right? We have an inversion here now. We would expect this volume balance to stay open and then offer price lower as well. So that's kind of the expectation. As we attack this low, hit the daily volume balance again, then that's kind of when our attention would really be seeing if we can't invert these. So on the way down, we expect them to be used as resistance, that's fine. But as we trade into this, if we make any attempt to try to like trade back up into this and then reject again, that's what we would not want to see. Conversely, we could just fall right through this, be completely offsides. So now that we got entered here again, we'll see if we can bounce or if we want to fall right through. right? And as we said, 5-minute higher time frame bearish play is what is going to reign supreme. And we'll fall right through. We'll make another pass at the daily volume imbalance, make a pass at the sell side here. And then if we were to do that, to me, we would probably come back down into this low and we'll be offsides. So already, right, we would have wanted to see this be a wick, kind of like here. Body closure immediately signals more than likely an attempt lower. Would pretty much have to hold here. We need to see the body hold midpoint. So pretty much watching that closure below midpoint, we're out. Could just run for a stop immediately, but if this candlestick holds and doesn't take us out now and closes below midpoint, we would expect the next candle to use midpoint as resistance to then attack stop loss. Come through this low here, right? So we open with the bearish volume imbalance. More than likely, we'll tap this candlestick's close, make a sharp aggressive down movement into a low. Only way we kind of maintain this position is if this gets inverted and this becomes a swing low. So we'll wait for the candle closure and see. But closing below midpoint, as we said, to me anyways, will signal and attempt to get outside of the actual volume imbalance. Once again, that would be like the lowest we would offer. So there's the rejection. Pretty much would need to see immediate rejection. If we keep playing here, we're going to fall through that and attack the sell side here. It's also previous day's low. Right. Cool. And then another volume imbalance. So we do get that low out. And there's a stop out. So we can move the partial. And now at this point, right, we'll have to see, do we want to displace away from this, or if we're going to revert back inside? I don't mind actually trying one more long back up into this 5-minute. 3:30 now, so we may get the old market on close orders. So really just watching this again. Right, for us, we were able to mitigate risk. We didn't get the partial, unfortunately. That's fine. We did a partial out here in the actual account. Why not? Why the stop not at last candle? This candle here? For me, I just didn't want to see the actual volume imbalance be, right, revisited. In my mind, if we're going to make an attempt to attack the volume imbalance, we would have made an attempt to clear the lows. So I'm fine with where it was at. If we want to invert again, right at that point, we'll have a new swing low. And I wouldn't mind trying with the same risk to actually hold that there. So now within here, we do have that daily volume balance. That's what we're looking at. Bearish premiums now, same idea. We're going to watch and see, right? Are these premiums going to offer us resistance to send price lower? Pretty much create another down leg. Revisiting opening range gap. Watching the bearish premiums. This is going to be a breaker, bearish breaker, high, low, higher, high. So I'm kind of observing here. Bearish breaker paired with the bearish fair value gap, paired with the high of a daily volume imbalance. Pretty strong bearish signal there. Wanting to see if that is what wants to hold us, send us lower. We invert that. Still think we get the run. Right, last half hour of the day. That'll be the breaker. Don't have that labeled. That's fine. What's up, my guy? Good afternoon. Top of the morning, top of the morning, top of the morning. So playing at the volume imbalance. Kind of want to see this 5-minute close. See what it does here. 2 minutes until it closes. 2-minute fair value gap as well. So for the time being, pretty key area, right? Key premium. Trying to see what we do. So far, hesitation at the breaker. Once again, we held daily low. Yesterday's low again. New day opening gap. So yeah, I wouldn't actually mind trying this one more time. Same concept. Okay, this time we've cleared the liquidity here. We still hold daily low. I would prefer to see the 5-minute, right? That's what we want to see. 5-minute was able to close there. So I don't mind trying that with 2 more. And then this will be kind of it for us today, right? If we don't get the expansion here now. I still like, right, with these, I still like the high. First presented here. I'm gonna get the rejection into daily volume balance. If we run, unfortunate. Dollar kind of consolidating as well. See if it can't fall. Meant to market order here too slow. Limit didn't get hit. See if we can't get one more retest. Yeah, I like highs as well. Most def. Leave the relative equal highs. In ES&NQ. Try to get back up there. Right now, just sitting at first presented. High the opening range. Pair that with the breaker. Right, really, if you're going to look at the whole, it's this. Consecutive down close. So we're hit with the high of the breaker, we're at the high of our opening range, and we're at the high of a first presented. Key area here. We kind of want to see a slight retracement, to be honest, from here. So I can hold, tap daily volume balance, then look for the rip higher. Small 1 minute inversion as well. Yep, so far just a little slow, choppy power hour. Expectations are the continued choppiness. We have our higher time frame area of interest. I like that daily volume imbalance, right? Remember, that's here. Say the daily wants to maintain bullish, we would like that. Same with the 4. Maybe 4 hour could even close back up here. Okay. Yeah, we need to get above that here. So as we kind of created the original buy setup off of that daily volume imbalance, we put in the low, relative equal lows, clear that, create the failure swing displacement through a high. Breaker with the bullish fair value gap, OTE, right? If it's going to hold us a few times, use it as resistance now. It's going to be a pretty key area here. Midpoint held perfectly. Yeah, so bodies are respecting that. This is the one that we're going to be using. And we've already completely filled in the 15-minute bearish fair value gap here. So if we can make another pass above that, we should be allowed to run. As we said, we'd actually want to hold here in the short term, so maybe leave relative equal highs, slight consolidation, make a run lower into the volume imbalance, and then try to maybe break. That's what we would expect here. Once again, first presented is holding as well. Right, so inside the 5, it's the first presented. Now that we've cleared a short-term low, curious to see if that'll be what wants to get the acceleration here. Or if we want to maintain this little hesitation at the 5-minute. About 2 minutes until the 5-minute here closes, so maybe a wick with the body holding just like we get here. Right, so that's kind of what we're waiting to see. Make another pass at that low potentially. If not, if we can't accelerate through the 5, we'll probably start running, to be honest. If we leave the consolidation high here. Balance price range in here. Above first presented again, so now I do want to see if that's going to be what wants to hold it there. As we said, if we get above the 5 minute, that may be what allows us to start lifting here. We've closed on the high, that 5 minute perfect, 1 minute left aligned with consequent encroachment. Curious to see what that wants to do. If we displace that again, come back down, right, that's where we maybe get our entry, deeper retracement. But if we hold that, we'll understand why. 5 minute, yeah, 5 minute closed above. So the 5 minute one may want to use its midpoint. I still like the deeper retracement, kind of can stay stuck in this consolidation. So I'm going to maintain this entry here. First presented, opening range gap high as well. So once again, stacking PD arrays, kind of behind the scenes as well as just the 5 minute itself. We do have equal highs here, so I'm all right, relative equal highs anyways. So just curious to see if price can, might snag that high if it wants to. Then maybe the retracement. If not, if we just get the slow grind, especially now, it's about to be 350, right? So hitting into the last 10 minutes, that's when we may get that quick aggressive acceleration. NQ kind of in the same spot. All right, so at its opening range gap high as well, we've hit the high of it. We tried to get above it, left that fair value gap, inverted it, bearish volume imbalance. Still have a chance. We'll see if we can't leave it, but now it's holding that tiny daily new day opening gap within, right, its opening range, and that's because it's really aligned with the upper quadrant. Like take the levels, right, you see that? So the top quarter level of the opening range gap is aligned with that little new day opening gap. So just watching that in NQ as well, seeing if it wants to hold its midpoint, seeing what ES wants to do inside this 5 minute. As we head into 350, I wouldn't mind actually then seeing the quick wick lower to see if price doesn't want to wick into entry and then accelerate higher. Some sell side here as well. So just playing inside. At this point, we'll probably just wait, as we said, 350. If we did go lower first, that'd be nice to see if we can't get entry. Higher first, may miss that actually and just run, we'll see. Or if we don't get any real aggressive movement, it's just going to be choppy into close. And in that case, we probably will return into the volume balance and almost fizzle out inside of that, right? The new day opening gap here, if we can't get back up into this range. 10 seconds. Let's see, let's see. Choppy. Okay. So we'll just close here actually. So we'll leave this here. This will be paper trade though. I'm out of the actual one. I'll just close inside that. Seeing it go up first. Not a fan of that too much. Dun-dun-dun. Cool. So we'll allow that. See if we can't tap here. Perfect tap. And then we'll actually see if we just can't get the 5. All right, we'll keep it a little bit easier since it's only 10 minutes left. High the 5 afterwards. If it's not a sharp rejection, as we say, we'll probably just consolidate into close. So with something like this, we need to see an immediate rejection to run these highs. If we start playing around in here, we'll just close manually as we head into the close. At this point, don't even want to see daily volume balance low. So that's why stop could be even tighter. Right at the low of it, pretty much. As we said, we'd want this to be the swing low followed by the immediate rejection higher. Okay, so far it looks like that will be the swing low. As we said, if that does get or become the swing low anyways, we'd want to see pretty much this bearish fair value gap be immediately invalidated. This would where we would not want to see any hesitation really at all. So if we're going to trade up into it and create that swing low, we'd want to see price push right through that. If not, as we say, we'll probably just kind of consolidate around the actual daily volume imbalance level to close out the day and close this daily candlestick pretty much on that. Okay, so there's a rejection. As we said, that's not necessarily what you'd want to see. Multiple attempts inside the daily volume imbalance within the last 10 minutes. If we're going to capture that last 10-minute macro, should move quickly. So now as we retest this, let's see. If we fall right through it, that's not bad either, but if we just kind of keep retesting the volume imbalance, that's what we would expect, just consolidation into the close. So we run the low, watching the candle closure, trying to see if we close inside. We do. Immediately try to hit this up close candle. That's kind of where we'd reject in immediate rebalance if we're going to now close below daily volume imbalance as well. For us, if we're nowhere basically here at 4, right, for me, we're not even going to partial. Just because it's getting later in the day, we go with easier targets. So just hit the high if we can get up there. Need to retest this bearish fair value gap and get above it. Instead, we end up holding the actual, right? So you wouldn't want to see that because now that's the immediate rebalance. Following immediate rebalances, price will tend to aggressively move in the opposite direction if we can't maintain the actual volume imbalance here itself. So once again, I want to see the closure. This is the key area. Another closure below after immediately rebalancing. This time we've actually closed below this swing point. So this candle here closes on the low, and this candle tries to make an attempt back up, immediately rebalances, closes below it. To me, that would probably mean we're going to try to use the low now and just consolidate into the close as we mentioned. Which if we're still in this at 4 o'clock, I'll just manually close wherever it is and just call it there. Right, small risk, 0.25% anyways. We've trimmed risk from the original stop. Okay, so yeah, just playing around here. So for us, we'll probably just close 3, leave one more for like 5 minutes. Let's see if we retest, pretty much break even. Oh, just one, excuse me, we only have 2 open. There's midpoint of that volume imbalance. Right, making an attempt for it here. Midpoint. We'll see if we actually want to get that low. Hold midpoint with the body, okay. So yeah, too late in the day for us. So at this point, right, we would just close at break even if we get back to that entry. If not, we already have the risk where it is, so we could take that out. We've accepted the risk. Power hour ends up being rather lackluster, right? So we consolidate, which we was, yeah, with that small range in FOMC, usually FOMC would actually make an aggressive move. Whereas here we did go higher and lower, but we didn't really clear out buy side, right? We left that buy side, even on the run lower, didn't clear out sell side until later. So now that we have, now we're hitting that consolidation just inside the volume imbalance. And that's what we'd really expect to close out the day. Consolidate inside of a daily PD array. Right, and look at the daily candlestick. It'll probably close on itself here and just leave that volume imbalance open. kind of like we see here, right? Similar delivery as we leave these volume imbalances. At this point, here's midpoint. Closure below that. As we said, we close on it. Now we close below it. That's when we use it as resistance to keep sending us lower. If we're going to close below the midpoint of it, that often will mean the low of that will want to be visited as well. There's the low, right? So we hit midpoint quick. We then tap the low perfectly. We then revert right into the opening of that volume imbalance, back into midpoint again. Right, we can just sell one back there, as we said. And then as we get back to break even, I'm fine closing. And if we want to run at that point, don't want to be involved. Past the day. And it's mad. There we go. That's so you end up break even on that. So overall, we just stay in that range. End up being range bound for power hour. Once again, really just following what the market's been doing the past few weeks. Yeah, messy. But as we said, we're quite literally on the brink of war, okay? So unprecedented times. I mean, obviously we've been in war before, but a lot of other fundamental news can kind of be priced in to price. But when you have such uncertainty like that, it's just going to be sloppy. Very high resistance conditions requiring a lot of give and take. So for us, we still... Oh. Where is our... Dun-dun-dun-dun. So for us, we end slightly a little bit in profit actually here. We'll end with this. All right, same ideas with the longs. As we traded into previous day's low and then traded up into this first presented, we partialed out. We were trying to stack a position as we traded into this again. Right, same idea, stacking here, stacking here. As we traded into this low, we actually took a little bit off just in case we were going to run out our original stop, which was below this low. We got real close, right? Closing only in one of the contracts here. It's that previous day low. And then I said at 350, when we go up first, I'm immediately closing as we trade into 830. Because whatever that original move is, we tend to fade that, right? So as we trade up into 830, I don't even want to try to hold for that run higher. From there, we just retrace. And at this point, as we said, just choppy into the close. So just a rather lackluster power hour. Not surprised. We've pretty much come to expect this type of delivery really for the foreseeable future, right? We'll get used to it. If you go in with this expectation, it's a little bit easier because then if we do start trending, it's always going to be easy to find trending moves, right? They'll jump off the chart. But if you go into it expecting trending delivery and you run into consolidations, that's kind of where it gets tough, right? Because then you start over trading and things like that. Maybe we end up just closing right on that daily volume imbalance. So for us, we'll go with that. Tomorrow we have a holiday, bank holiday, Juneteenth. We usually tend to just avoid those. I'm trying to see if it's worth coming back in the morning at all, just to show what it'll look like, the pre-bank holiday trading. Let me see what time. Yeah, because market will close at noon. I don't know if it's worth, to be honest. Nah, we'll just let it be. All right, with sloppy FOMC, small range day, bank holiday tomorrow, I expect us to really just be in this same range. So for us, I think it's better to just stay out, right? There are plenty more days. So yeah, my protocol, I won't even be looking really tomorrow. I advise you all to do something else as well. Do something you enjoy, find another hobby. Let tomorrow pass. And then we can actually come back on Friday and see if Friday, to close out the week, we don't get anything that is useful to us. So yeah, we'll leave you guys with that. I appreciate you guys hanging out this afternoon. Ugly delivery. Right, can't do much about it. We'll follow it, but as long as we're kind of in these risky conditions, this type of delivery is to be expected. So yeah, nothing tomorrow. We'll be back Friday morning, and it'll be pretty long stream on Friday. So plan for that. Until then, have a great afternoon, everybody, and we will talk again Friday morning. Take care.